With the big, beautiful budget bill signed into law last week, we're now stuck with the onerous task of figuring out what's actually in this massive piece of legislation and what it means for all sorts of industries. In some cases, it's tricky, because even when the new rules are clear, it's not obvious how they'll play out. Take the sports betting space, one of the fastest growing industries in America over the past few years, dominated by DraftKings and Flutter Entertainment, the parent of FanDuel. There was an obscure provision in the big, beautiful bill added late in the process that seems like it could impact these companies significantly, but Wall Street's had a strange reaction to it over the past few weeks. See, buried within the legislation, it's at the bottom of page 237 of the 870-page behemoth, is a change in the way that gambling income is taxed. Under the current law, you have to pay taxes on your gambling winnings. Crucially, though, if you also have gambling losses, you can deduct those from your winnings, so that you're only paying taxes on your net winnings, the same way we would do it in the stock market. So if you win $1,000 betting, but also lose $1,000 betting, you don't pay a penny in taxes, which makes sense, because you didn't make any money. But starting next year, that's about to change. While you'll still pay taxes on your gambling winnings, you'll only be able to deduct 90% of your gambling losses. So in that same example I just gave you, win $1,000, also lose $1,000, you'd only be able to deduct $900 in losses, meaning you'd have to pay taxes on the remaining $100, the winnings. I think that's brutal. This small change to the way gambling winnings are taxed was added to the Senate version of the bill at some point last month, and we only started to see people raise the issue last week. Personally, I didn't hear about it until a professional poker player posted it on X last Tuesday, explaining it in a 4-minute video that this rule will essentially put professional gamblers out of business. He gave the example of a professional poker player who might make $200,000 a year from $5.2 million in gains and $5 million in losses. With the new rule only letting them deduct $4.5 million in losses, that player would be taxed as though they made $700,000. Meaning they probably owe more in taxes than they actually made that year. Not a good business. Of course, it's much bigger than just the relatively small number of professional gamblers. Once the bill was signed into law by President Trump on the 4th of July, people finally started asking what this new rule means for the gaming industry, especially the popular online sport books like DraftKings and FanDuel that dominate the business. It's easy to imagine how this new legislation would damage the whole industry. Forget professional gamblers. If regular bettors are facing the possibility of having to pay taxes if they break even or even lose slightly, they might decide that it's not worth doing. Heck, even the winners will have to pay more taxes on the gains. But you know what? Since the Senate unveiled its version of the budget bill in mid-June, the version that included the change to gambling gambling taxes, the stocks of DraftKings and Flutter have been roaring. DraftKings rallied nearly 20% in June. Flutter was up 13%. And they're both basically flat in July when people started focusing on this issue. So what the heck is happening here with this taxation thing? Okay, on Monday, analysts at Citizens published a note on the implications of the budget bill for the online gambling space and offered a more tempered view on the subject. While they acknowledge the problem, these analysts aren't too worried about it because the major sports books already do everything they can to push away customers who win too often, known as the sharps. They're also not worried about so-called VIPs, which are people who bet a lot but don't do as well as the sharps, because in the analyst's words, quote, sports betting companies are only catering to these players, knowing they are net losers in the long run, which would not be impacted by the incremental taxation, end quote. Basically, the new taxation is very bad for professional gamblers or anyone who knows how to win reliably. But those are the last people FanDuel or DraftKings want. In fact, if the budget bill puts these people out of business, it might actually be a good thing for the online sports books. The truth is, most gamblers on these sports betting platforms lose money. There's a reason why this is a great business to be in. And anyone with substantial losses really won't be impacted anyway. Of course, there's another reason why Wall Street doesn't seem to be worried about this change in taxation for gambling winnings. There's a very good chance it might be reversed. On Monday, the congresswoman who represents Las Vegas introduced a bill that would restore the 100% deduction for gambling losses. Given this is it only costs $1.1 billion, I could see that bill passing. But honestly, I don't think it matters. DraftKings and Flutter haven't even bothered to push back against the new provision. And historically, these companies are very, very vocal about any legislation that hurts their business. I don't think they're shedding any tears over this tax provision that drives away gamblers who win too often. So we reached out to both DraftKings and Flutter Entertainment for a comment here. DraftKings said they support the new bill to restore the 100% deduction for gambling losses. So far, Flutter hasn't gotten back to us. But at least DraftKings sounds like they don't like the new rules, even if they're clearly not fighting tooth and nail to reverse them. Ultimately, I think this is something we need to watch, but it doesn't change my bullish attitude toward DraftKings and Flutter. The thesis here is very simple. These two companies have emerged as an effective duopoly in online sports betting. No one else can verge at coming in on this one. This law just makes the moat even bigger for them. There's building growth to these stories because of the gradual state-by-state rollout of legal sports betting, with some major states like California, Texas, and Florida representing huge opportunities. Also because the industry is a lot less competitive than it used to be, DraftKings and Flutter no longer need to offer big incentives to draw in new customers, making them more profitable. The gambling tax change is clearly not ideal, but there's a very good chance it won't have much impact on either of these companies, and it could even help them. Here's the bottom line. I still like DraftKings and Flutter, but more important, this is just one tiny example of the work that's being done all across Wall Street to figure out the impact of this massive new budget bill. Some of it's straightforward, but like we saw with sports betting, sometimes these new rules might do the opposite of what you'd expect. Let's go to Todd in California. Todd.
Hello, Jim.
Hey, Todd, what's up?
I have a question about Nike.
Sure.
A question about Nike. I bought it at like 76, but I'm just curious. On news that they had a deal with Vietnam, but I'm just curious whether or not you think it still has more room to go.
I think Nike's going to be a long-term turn. I think that there was a lot of damage done, and a lot of the competitors came in and really on. And we know that New Balance got strong and Hoka got strong. So it's going to, there's more competition. It's going to take a little longer than expected, but ultimately I think that Elliott Hill is making all the right moves, and you will be fine. Let's go to Spencer in Missouri. Spencer.
Hi, Jim. How you doing?
I'm doing well, Spencer. How about you?
I'm good, thanks. My question was about IBM over the next few months. What do you think about IBM?
Oh, I like IBM very much. I mentioned Ben Wright just earlier. I think that Ben, he's really turned me on to this stock. We did a very positive piece about it. I think it goes, I'm going to say not much higher, but creeping higher over time. And that's actually a great place to be. So I like IBM. I think we need to watch how the budget bill will impact the sports books, but it really doesn't change my bullish view towards DraftKings and Flutter, since both of these companies have emerged as the leaders of this growing industry. Much more Mad Money at Honor is committed to improving the quality of care for elderly adults across the world. Now, I'm sitting down with the CEO to hear how this private company plans to achieve the goal. Then there's been so much major news out of corporate America already this week, but it's been overlooked given all the tariff talk out of the White House. I'm running through the biggest events and telling you how to keep your eyes on the prize in this market. It's not easy. And all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.